Good afternoon once again. So I really do, as I said earlier, appreciate everybody taking the time to talk about my favorite subject, which is builder's risk insurance. We try to make these webinars very educational, so I will touch on our product and maybe give you a little bit of a sales pitch on our product, but for the most part, this is going to apply across the marketplace, and we're going to talk about builder's risk course of construction coverage. It's a very unique coverage. We've been dissecting this now for a while, and every time when I think I've covered it all, then other things start happening. So today's topic is, as you can see, says when coverage ends. But maybe a better way to look at this is when coverage needs to be extended. Let's talk about that. So really, that's really the theme of today's workshop. And we're going to touch on the coverage form. We're going to touch on the marketplace. I'm going to try to give you some insight as to why underwriters ask the questions that they do. And I think that should help you as agents. And this is critical to make sure coverage is in place and the risk is properly covered. So without further ado, let's get into it. So I'm not going to read this one to you. This is right off of our form. It's a section of our form called when coverage ceases. And there's several different things that happen that trigger the end of coverage. Obviously, the expiration date on the policy is one. We all know that one. But a lot of builder's risk is predicated on occupancy. So if the policy has not been endorsed to cover occupancy, certain types of occupancy will trigger the end of coverage. So that's another thing that you got to think about. But interest ceases, closing, permanent insurance in place. So just keep in mind, you need to read whatever form you're selling. Usually it's on the first page of the form, go to when coverage ceases. Usually it'll say when coverage begins and then when it ceases. So today we're talking about the end of coverage. So take a few minutes when you get a chance and read the form. Once again, if you need our form, you can go to our website and download the form. It's there for you. So what we're going to talk about today is the project is not complete. So how many of you, obviously you can't answer me, I wish you could, but I wonder how many have been involved in a construction project that did not finish on time. Especially in today's world, we have a little virus that's kind of affected a lot of projects around the United States, this thing called COVID. So I can tell you in our book of business, we have spent the better part of the last 6 months extending policies. Everything kind of came to a halt. We're going to go through the reasons why things are delayed, but safe to say that a lot of projects have been delayed lately. So what do we do? Now the project's not complete. We know the coverage is coming to an end. What are we going to do? So let's talk about that. I'm going to give you some ideas of things that we hear. And it's kind of funny because we talk to literally hundreds of agents every day. And these are the stories I get. And it is, you guys are a creative bunch, I'll give you that. So like the dog ate my homework and this and that. So one of the things we hear a lot of, and I have a friend that's a builder, and he looks exactly like this guy does in this picture, but material shortage. A lot of structures are built out of lumber. There's been a lumber shortage in parts of the country. Sometimes concrete blocks, they can't find the blocks. There's not enough of them, so there's a lot of material shortage. It's getting a little better than it was over the last number of months, but that is a legitimate reason of why projects are delayed. Sometimes they can't get the materials. Along those same lines, a staffing shortage. We've had a lot. We're in Florida, and we have a lot of labor shortage. For whatever reason, they can't find skilled carpenters, roofers, electricians, plumbers, and they're backed up. So we have a staffing shortage. So whether you have a material shortage or staffing shortage, these things lead to delays. Projects that normally would take 8 or 9 months are now taking 13, 14, 15 months. So you can understand the coverage ramifications when projects are delayed. A lot of times the scope of the project has changed. I'm going to give you a few scenarios. We get involved in these a lot. We write a renovation policy and they're just going to, add a room onto a structure, or they're going to just do some interior gut rehab. So they go in and they start knocking down a few non-load bearing walls, and all of a sudden they discover wood rot in a support beam. So now all of a sudden the whole project has changed because of that wood rot in the support beam. So now they got to take a relatively easy renovation project and make it a structural load bearing project. Well, once you do that, you have dramatically changed the scope of that project. And so you need to make sure the underwriter knows this, because if they don't, you could have a gap in coverage. We could have some serious fault going on. So scope of the project, if it does change, the whole key to this too, you'll see this at the end, I'm going to say it about 3 or 4 times, but is really to communicate with the underwriter. Pick up the phone and say, my builder just called me. The scope of this project we wrote has changed. We got to get it done right. So best thing to do is communicate. Always remember that. The value at risk changed. Sometimes we thought it was going to be $1 million project and they get in there and because of the delay, or maybe they decide they want Italian marble, or they want different windows, or they want upgraded appliances. The $1 million project is now $1.2 million. So that value at risk has changed. So once again, get on the phone, call the underwriter. You know, if it's within a reasonable amount of increase and the reason is logical, the underwriter will probably go along with it. But don't guess on that one. So make sure you let them know, the underwriter, that the value of the project has changed. We see this sometimes for a lot of reasons. Maybe the builder had some issues, maybe they were overextended, so now the builder has changed. So once that builder changes, in the underwriter's mind, the risk has changed. They have to re-underwrite the builder, the new builder. Now, many times they'll go ahead and accept that, but they need to know that, because you could have a gap in coverage, once again, if you don't communicate that effectively. So these are things that happen literally every day to us. Sometimes it's near the end of the project, we're rolling along, we're thinking good, we're going to be okay, and then the inspections slow down. This happens in a lot of it's been happening lately in a lot of the larger cities. I guess the inspectors are just backed up. So if they don't get the final inspections done, the closing doesn't happen. Once the closing doesn't happen, what we have is a structure that's sitting there, maybe in the builder's name, and they need more coverage. You know, maybe they only need a month or 2, and that's fine. We'll look at that. So that does happen. Final inspections. Sometimes the project didn't start on time. We wrote a policy effective May 1st, and for whatever reason, certain delays, all the things we talked about, the project actually didn't get started until July 1st. So now what that does is on the back end, you're going to need to extend that coverage. So if you know something didn't start on time, the best thing to do is probably to go ahead and extend it as soon as you know about it. Don't wait till the end of the policy to try to extend it, because I'm going to give you some scenarios that are not good if you wait till the end and you're running around trying to get coverage extended. So just make sure that if you know it's delayed, make sure the underwriter knows that, and we'll go ahead and extend it right now. These are all of the questions, not all of them, but a lot of the questions you're going to get from an underwriter, and we're going to go through these kind of in detail because I think it's important. So you need to provide all of the answers to these when there's an extension. And I've been asked, sometimes agents will say, well, why are you asking all these questions at extension? You've already been on the risk for a year. Well, builder's risk is course of construction, which means you have something you've insured, and we know it's changing as time goes on. The risk is growing. It's growing in value. It's growing in complexity. You know, the rate contemplates that. The coverage contemplates that. But when you get to the end of the project, so you told us it was going to take a year, and now you need 6 more months. So we're going to say, well, why do you need 6 more months? You got to tell us. So this is why we basically have to re-underwrite the risk, because by simply increasing the time insured, you change the exposure in the underwriter's mind. Not to get too deep on you here, but builder's risk is predicated, the rate, at going from 0 amount of risk to 100% at the end of the project period. So from an underwriter standpoint, we look at it and say the most we're ever going to be on, the most risk we have is near the end of the project, when 100% of the values are sitting there, is pending closing. If that's when the fire burns it down, that's when we have the most exposure. So, you know, that's why we have to, we get pretty nervous near the end when we have to extend things. What if we have to extend something we had contemplated not going through wind season, and now you've asked us to extend it, and it's going to go through another wind season? We never factor that into the original rates. So the exposure has gone up dramatically, and you know, that's why we have to re-underwrite it. So first of all, has the scope changed? We're going to have to ask you that. You know, if it's was a renovation, simple, fine, and now it's a structural thing because they found damage, which does happen, we have to re-underwrite it. We might not be able to extend it if the scope has changed, or we might have to increase the rate. We might have to increase the deductible or do different things to it. But the bottom line is, let us know as soon as you know about it. Don't wait till the last second. I have agents that call me and say, "Oh, the policy's expiring tonight at midnight, you know, and I got to get coverage for it." And things have changed, you know, and I feel bad, but sometimes we can't help them out because of that. We're going to ask you what percentage of the project is complete. So if we have a $1 million project and you told me it was going to take 12 months to complete, and now you call me 11 months later and say, I need another year's coverage. And so the first thing I want to ask is what happened? Why is it, you know, not even, you know, 50% complete? What's going on? And if you say, well, you know, the owner and the builder got in a fight and they didn't agree with anything or something, or the reasons aren't real good, I have to re-underwrite that risk. The bottom line is I need to know why the project is not further along than it is. What an underwriter worries about is financing. A lot of times you have a project and it stalls because they run out of money. So now the thing has run out of money, it's sitting there, there's nothing going on. Do you think that's more exposure to the underwriter? Absolutely. You know, we have not only a moral hazard, but we have the hazard of property that's sitting there longer. The longer it sits there, the more exposure we have. Is the construction ongoing? We want to make sure it hasn't stalled completely. If it's a stalled project, we probably don't want to be on it. We want to make sure that we have something that's ongoing. Once again, what's the reason? You know, just tell us the reason. If it's any of the reasons I told you earlier, those are all pretty logical. I would think an underwriter would understand that. We're going to ask you to estimate a completion date. And that's something I will tell you in the beginning, we probably need to get better at determining how long something's going to take. The reason I say this is sometimes it'll be a $2 million project and an agent will call me and say, I want to write a 3-month policy. Well, even in the fastest moving state in the country, which is New York, they can't build a $2 million building in 3 months. I mean, it just doesn't happen. So you got to be realistic with how long something's going to take. And we need to write it for the right amount of time in the beginning. Provide details of the work completed. We need to know what they've done. Okay, so it was supposed to be done, but it's only 75% completed. Here's what they've done. They've had to wait on some of the new flooring. It hasn't come in yet, so it slowed down the project. Those are logical reasons. We need to know what's the work that remains to be completed, not what you've done, or we need to know what you've done and what you have left to do. Pretty logical there, I'd say. We need to know the value of what is left to be done. Once again, structural is a big problem in renovations. You know, structural renovation is usually an excess and surplus lines risk. So the standard markets like us get nervous. We really don't want to do that. So if the project has morphed into something structural, you're probably going to have to find another market, probably. Is the structure occupied? Maybe we assumed it wasn't going to be occupied and now it is occupied. And we got to be careful that we don't bump into some of that wind coverage ceases problems because it's now an occupied building. And the exposure changes in underwriter's view once the building is occupied. And once again, has there been any losses? We're going to ask that too. You're asking to extend it, and maybe there has been a claim, and maybe it was a little fire or lightning loss or something. You know, and we've paid the claim, we fixed it. It doesn't mean we'll get off the risk. We just need to know that. So those are the questions you can kind of assume you're going to get. So kind of went through this pretty quick in about 20 minutes. We're going to open this up to questions in a minute. But these are some of my final thoughts when it comes to extensions. And this is critical. I mean, these are things, the worst feeling I get is when an agent calls me last minute and needs to extend coverage and it's beyond my authority. I can't do it. It's just a bad feeling. It doesn't make me feel good. I know the agent doesn't feel good. They have to communicate to the insured. It's a big problem. So I'd rather try to mitigate this before it gets to that point. So as a project is delayed, time is really the most important thing. So as soon as you know it's delayed, you better look at the expiration date and figure out what we're going to do. Agents don't quite understand this, but as I said earlier, time is a major factor for us as an underwriter in builder's risk. because the rates don't contemplate something sitting there forever. This is not permanent coverage. It's actually in the marine coverage, which means property in motion. So it's being built. Once it's done, we got to get off of it. We got to get permanent coverage if it's going to sit there. So time is of the essence. Once again, I said earlier, the total value, these are completed value policies, which means we write a policy in the beginning for the completed value, understanding that, and no, the rates are low because we don't have all the exposure in the beginning of the project. We have all the exposure at the end of the project. But if at the end we've extended it, you can see where our exposure is growing exponentially. And once, I cannot stress this enough, do not wait till the last minute to get some of this done, because if the risk has become more complex, the underwriter has to do a lot of work with that. So here's the one that I want to talk about, because it seems to happen every year, is usually it happens, something is coming up and it's expiring, and you think, oh, no problem, I'll get it extended. Jeff's a nice guy. He extended the last one for me. And you call me, and guess what? There's a Category 5 hurricane bearing down on the East Coast. And you're asking me to extend coverage on a multi-million-dollar building that I've been on for a year. You know, I would love to help you. In a normal circumstance, it probably wouldn't be a problem. But maybe my binding authority has been suspended. So you're out of luck. Now you have a potential multi-million-dollar building sitting there with no coverage. That's happened to me on several occasions, and I don't like it. So make sure you know, and the key to this is, I would say 30 to 60 days out on these projects, you need to make sure where they stand. If they're going to need extensions at that time, that's when you need to do it. Same thing with wildfires. You know, we have, right now, we have parts of the country that are suspended for wildfires. We have some that are suspended for flooding, because there's still flooding in parts of the country. So once the binding is suspended, the underwriters can't do anything. So don't wait to extend these things until those events are occurring. As I said, meet with the insured 30 to 60 days before the expiration of the policy. Find out how far along they are. If they're going to need an extension, it's better to do it at that time. Work out the deal. Pick up the phone and call the underwriter. Kind of a novel idea. Just tell them what's going on. And here's something that probably would help out a lot if we do that. So let's say we have $1 million building. We have $1 million home being built, and it's going to take around a year to build it. Build it, sell it, done with it. Maybe it takes 14, 15 months on average. If we wrote the policy for the right amount of time in the beginning, we wouldn't be having this whole webinar on extensions. So what a lot of agents will do is say, well, let's write a 6-month policy and then we'll extend it. And so they write a 6-month policy and then they call us, and then we extend it. And then we have to extend it again. So we've done a lot of work on that, and you've run the risk of a gap in coverage. So I would say it's better to write the risk for the appropriate amount of time when it initially starts. Hopefully this, I think that might be it today, guys. That's pretty much it on extensions. I know I lectured a little bit to you today, but it's that critical. It's really talking about making sure everything's covered properly and stays covered properly. Our next webinar next month will be on tenant build outs. We have a lot of different aspects of those that I want to talk about, and some of those are scope changes and stuff. But so just make sure you tune in next time. Try to make it worth your while. What we're going to do now is open it up for questions. So does anybody have any questions? And we'll go from there on extending coverage and the end of coverage.
All right, Jeff, we've got a few questions already.
Good.
So first one, other than the builder's estimate, how can you get a more accurate project time to complete?
Other than the builder's estimate, how can you get a more accurate estimate of the job? Is that it, kind of?
Yeah. Yeah.
All right. So the first thing that we do, and this is kind of a general rule of thumb, but we've talked about cost per square foot, but it gives you a general idea. So if you ask me, they're building a 4-story office building in New York, made out of masonry, non-combustible construction. You're looking at about $250 to $300 a foot, give or take. So as long as the estimate is close to that range, we're probably okay. But if they submitted it, it's $100 a foot, something's off, you know. And I have seen some that are $500 or $600 a foot, and you got to kind of check those out. Sometimes it's very ornate construction, especially on homes. Homes can be all over the place, but A lot of it is the cost per square foot. And I would pick up the phone and call the underwriter. And usually that's what we do. The first thing I look at is when you submit a risk and it's 5,000 square feet and the value is X, and I know it's located in Arkansas, I've got a pretty good idea of what the cost to build that thing. I really do. And it's kind of the local marketplace. That's what I would do. So, but I think we can get close. And if you tell the builder, the easiest thing to tell a builder is take the selling price minus the land. So what, Mr. Builder, if you're building this thing, what's it going to sell for? Okay, so it's going to sell for $2 million, but $500,000 of that is the land. So we don't insure the land. So let's write a policy for $1.5 million. That's going to insure his labor, his materials, his overhead, and his profit is also going to be covered. So selling price minus land is another little trick that I use all the time. Hope that helps.
All right, next question. Will you write a policy longer than 12 months term, for example, 18 or 24 months?
We could readily go to 24 months in our program, and I stress doing that. It makes it so much easier. And I'd even overestimate it a little bit because we're not talking about that much money when you initially write it. So if you think the project's 14 months, let's write a 15-month policy. Now we got a little leeway in there, and maybe you don't have to extend it. So I would always maybe add a month to what you actually think is going to happen. We can even go under 12 months. I mean, if it's truly going to be an 8-month project, we could write an 8-month policy if we had to. But be careful on that one, because usually what happens then is you keep extending it. And as I said, it's kind of a pain for you guys, pain for us, and it does run the risk of a gap in coverage. So whatever the length is, make sure you know what it is and let us know. Perfect. Good question.
All right, next question. Do you offer flood coverage if it's needed on a risk?
We do offer flood coverage depending on the zone and the value. So flood is something that is, we have to map every risk because flood can vary across the street. You can have one lot that's an X and across the street it's a shaded X. And maybe it's this or that. So flood is kind of a tricky one, but we do flood. And there are other flood markets too that will even write higher risk stuff. So, sometimes you have to place the flood with another market, and that's okay with us too if you have to do that.
All right. Can you extend a policy on a month-to-month basis?
Yeah, I don't like doing that, but we do it. So a lot of times what happens is, and this is legitimate, maybe talking about those final inspections. I mentioned that. So it's the closing was scheduled, the inspection is delayed, and you call and say, Jeff, I really just need one more month coverage. Can you help me out here? And yeah, we'll do it. But now I usually say, I don't want to be doing this every month. And a month goes by and you call me again, Jeff, I need another month. And about the 4th time you're saying, Jeff, I need another month, I'm going to say, come on, man. But yes, we can do that. We'll help you out on the end. And not all companies will do that. So we are a little different there. And I will say this, what you're going to run into on extensions, and this is how you really find out how companies are going to treat you. Some companies will write a 12-month policy knowing that it's an 18-month project. And at the end of 12 months, and you call and you say, I want to extend for 6, they'll go, oh, no problem, but we're going to quadruple your rate now, even if the scope hasn't changed. And you're going to go, oh, wait a second, nothing's really changed. Why are you, quadrupling my rate? And the reason they do that is because they can. I mean, in their minds, the risk has changed. It's gone longer than the policy period, so they're going to bump the rate up. And if it's a little bit bumped up, you're okay with that. But we get risks all the time submitted that are 75% complete. And you'll say to me, Jeff, I want to move it to you now because the Tumbleweed Mutual is raising the rate. I'm going to go, I can't help you out there. I could have helped you out if you wrote the risk with me initially. But I can't take that 75% complete risk and write it now. It's too much risk for us. So just keep in mind, that's the key to that one. Good question.
All right, next question. How long can a project remain vacant while waiting for inspection or electrical hookup?
All right, so under our form, if you write ground up new construction and now it's completed pending closing, you can actually go to the expiration of the policy. There is no vacancy clause. Where the vacancy clause comes into is if you write a renovation policy with an existing structure, it'll say if there's no construction activity for 60 days, then there's very little coverage. The coverage is reduced dramatically. So it really depends on whether it's ground up new construction or if it's a renovation with existing structure coverage. Two different animals there. But we do have, not as many as they used to be, but we have builders that will build a spec house once in a while and they think it's going to sell and it doesn't. So it has to sit there for a while. And we'll work with you on those. Hopefully there's not too many of them. We don't like them, but it does happen. So good question.
All right. Do you provide an endorsement for permission to occupy?
Yeah, we do. We underwrite that. We're going to, we want to know what the occupancy is. And, a lot of times too, if there's construction going on at the same time it's occupied, we have to factor that in. So the bottom line is we will. Sometimes we have some coverage built in and you don't have to do it. It just depends on what the occupancy is and the percentage of occupancy of the building. So there's a series, there's underwriting questions that we have to answer. But the easy answer is yes, we will write permission to occupy on most risks.
All right. When should I reach out to the client to discuss an approaching expiration?
I mean, you guys all have, this is a little different than permanent. I'm sure you have your guidelines for all your permanent coverages. You reach out, 60 or 90 days out. I'd probably do the same thing. 60 is probably enough. So if you reach out 60 days before the end of the policy and say, how's that project going? Are you going to be on time? It's a good time to touch base with the builder again anyway. So you could ask them about the next project at that point. So I'd say 60 days is good.
All right. Do you provide a leg 3 endorsement for course of construction like defective work?
I'm sorry, Darcy, I didn't catch that.
Sorry, Jeff. Do you provide a leg 3 endorsement for course of construction defective work?
I'd like to say I didn't understand you again, but I did. Yeah, I really don't want to get into leg 3 today. The bottom line of what it is kind of like a way of covering. It's almost a GL coverage. It's becoming more prevalent in Europe. We're starting to see it in the US, but only on really large risks. I could probably do a whole nother webinar on leg 3 if I had to, but for what our class of business and what we're talking about today, it really doesn't apply. So we'll have to watch the marketplace and see if it becomes more common as time goes on, but I haven't seen it in the lower values that we play in, but it's definitely being talked about.
Okay. If the project is not complete, isn't it simple to just extend it? Why do companies have to re-underwrite it?
Kind of what I talked about all day today was from an underwriting standpoint, the risk it grows as time goes on. So as you get near the end of a project, all of the risk is sitting there, 100% of the value. Maybe it is sitting there vacant, pending closing. That's when, if something's going to happen to the project, that's when it's most at risk. So if you're asking me to extend that value further out, I have to contemplate that risk and charge more for it. I have to re-underwrite it. So that's kind of the whole point of the whole webinar today. But good question.
All right, Jeff, it looks like that is all the time we have for questions today. So if your question was unanswered, Jeff or someone from our Builders Risk team will be reaching out to you to answer your question.
Well, fantastic, guys. I really appreciate you taking the time. I said this afternoon, I enjoyed the topic. This is very critical to what we do in this business. You can see there I am. Donna's my lieutenant. If you have any questions, reach out to Donna or me anytime. We look forward to doing business with you, and stay tuned for next month. We'll keep going. Everybody have a great day. Talk to you soon.